Good afternoon, guys. It's Saturday, September 25th. My name is Dave Coker, and this is Talking About Finance. So welcome. As we always do, let's start out by seeing what the S&P 500 did last week. And remember, guys, heat maps, green is good, red is bad. And the brighter the green, the better you feel. And the brighter the red, the worse you feel. Unless, of course, you're short the market, which I would never recommend anybody go short. It's a good way to lose a lot of money. But in any case, that's how you read the heat map. Interesting week, guys. S&P 500 closed up actually about 51 basis points. It was down pretty severely until Tuesday, then it bounced back. The VIX, remember the volatility index, we look at it because it gives us an idea about fear in the market. It's the ratio of puts to calls. I'm a little bit more involved in that, but that's all you got to know. And it traded down to 1775, so it's below the long run mean. So maybe nerves are a little more calmer as September closes. But keep the faith, guys. Even if there is a market crash, right? Dividends are still going to be paid. Oh, you don't invest for dividends. Have fun staying poor. No, I'm just kidding. In any case, guys, speaking of dividends, yeah, this is good. This is a real interesting one because I've got one of my friends is over at Bank of America, and she sent this through, and we were in the Telegram channel. We were chatting about it. And yeah, it looks like dividends are going up across the board. Real estate is actually doing pretty well. Consumer discretionary, yeah, you might go into that. I've got significant real estate exposure, as I shared with you guys before. I do own REITs, real estate investment trusts back in the States. And I've also got property that I own directly in 3 different countries. And yeah, it's curious. Dividends actually looking pretty good for the next year, next 12 months. And also when you take a look at rental yields, rents are going up. I know I don't really track the U.S. that much because those are long-term tenants and they're never going to go. And I never raise rent on a sitting tenant. But in the U.K., up north in particular, I've got some flats that do see turnover. But my God, they're going up significantly. They're managed for me, and I just let the manager get on with whatever he wants to do. And just to give you an idea, they normally rent at 425. We've seen them drop down to about 400 before the pandemic when times were tough a little bit. Voids were there, but now they're going for 475. One just flipped over. It's the most amazing thing. So it's a fairly significant uplift there. So yeah, pay attention to dividends. You do need to own dividend paying stocks because that is the sole thing in finance, at least in my opinion, that will set you free. You just sit back and collect passive cash flow. What could be more beautiful than that? Well, some things never go away. And this is China. China in the news this week because they banned Bitcoin. Check this out. This is, I don't know where this came from. Somebody put it in the channel. We were laughing about it. Because, yeah, I remember distinctly when they banned it in 2017. And, it just goes on and on and on. And now in 2021, they've got another ban. I'm not quite sure about the mechanisms of the structure, how they're going to enforce it. But it'll be interesting to see how it plays out. They do try periodically. I don't think they can actually do this personally, but who knows? Well, maybe they'll get away with it, maybe not. It'll be interesting to see how this plays out, especially because China is very advanced with a digital renminbi. And if you hop on my blog, FinTech Flash News, we do talk about that a fair amount there. But in any case, guys, we know there's a lot of interesting stuff going on in the markets. And stepping back from the markets, we can see the debt is soaring. This is global debt issuance. And my gosh, look at this. It's absolutely incredible how it's lifting off. How can the world ever pay it back? Global GDP is roughly 65 trillion. How can they pay it back? I have no idea. All I know is that in the States, at least, where I do tend to look at stuff very carefully, we can see that national debt's at record highs. We know this. But check this out. This is something I pushed through on my research newsletter this morning. I got a couple slides from that I'm going to share with you. And you can see when you take a look at interest cost, how much are they actually paying for interest as a percentage of gross national product, GDP, it peaked out at about 3.15% in 91. Now it's 1.65% as measured by Fed funds. Now, it's interesting, guys, when you look at this, because when you take a look at the funding, you see a lot of people are quick to dismiss the debt load that we've got in the States now. They say, oh, yeah, it doesn't cost anything to finance. Well, about 75% of the debt that they're borrowing and spending is financed off the short end. It's less than 5 years to maturity. So this is going to become a problem, and we're just going to kick that can down the road. It's not really a good thing to do, but it's like what we're doing in the States, and I don't like it. I live debt-free. I encourage you to live debt-free. But, they want to send that bill to the grandchildren or the children. Yeah, that's it. It's going to manifest in declining living standards. It just is. And here's how consumers feel about this. This is the 1 year ahead expected inflation rate. And what they're doing is they're talking to people. And this is off the New York Fed. And you can see here, guys, that the consumers expect the 1 year inflation rate to be 5.2%, a little mitigated on the 3 year, but we'll have to see. Either way, this is far above the Fed's inflation target of 2%. And I think they've sort of lost control of this because we are seeing inflation all over the place, not just in the UK, where I track things very carefully in terms of our living costs, but also in the US. And once again, off my newsletter, we broke apart CPI. This is off the wonderful Fred site, which you can go on and just open an account up and use. It's free. And when you go on Fred, you can actually take a look at CPI, but I find it really fascinating. I've been doing this every day for weeks now, decomposing CPI and looking at different drivers. And here we've got two different series. What we're doing is looking at CPI for urban consumers. We're looking at food at home and food eating out, away from home, right? And you can see here, what I've done here is I've gone back over 2 years. I've baselined the chart at 100 at August 1st, 2019. And here we up to August 1st, 2021. And if you're going to eat out, it's going to cost you 8.3% more than it did at the beginning of the horizon. If you're eating at home, even 7.7%. It's really amazing what's going on with prices. And a lot of people do seem oblivious to it. They don't track things. I shared with you guys as part of my process to build personal wealth. I track a budget. I keep a budget, and I track performance against the budget every month. Yeah, I'm fun to talk to at parties. But regardless, I can tell you in the UK, our personal rate of inflation is closer to 12%. I've got the data. I'll share it with you next week. It's absolutely incredible. So whether you're eating out or eating at home, it's going to cost you more in the States. And we're going to wonder how they put it all together and come up with such an artificially low CPI number. I would encourage you to track it yourself. So regardless, guys, we know things are going to cost more. And where's the money going to come from? Everybody just smugly says, oh yeah, we'll get paid more, blah, 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 taxes, blah, blah, blah. Well, yeah, the U.S. economy is sort of struggling. There is a sharp slowdown. It hasn't really been talked about too much in the media, but without a doubt, and I do tend to look at lots of anecdotal indicators. And here's an interesting one. We're looking at office occupancy, and this comes from Keystone Systems. Again, I look at oddball stuff, I won't lie to you. And I put this in the Telegram channel, and some of my buddies now are also looking at Keystone. Because what they do is they control about 90% of the office market, the office key market in the States. When you swipe your card, odds are you're using the Keystone Systems card reader. And they publish their data, and look at this, that reopening just ain't happening, guys. I'll let you go through this at your leisure, just freeze the video. You won't hear my annoying talking or my laughing. But in any case, take a look at the video. It just ain't happening, guys. We're running really low in terms of occupancy. And what do you have to think about what that says about city center business activities and city center commercial real estate in general? Here we are, a little bit different reading from Keystone, and you can see the average is basically 33%. It's up about 2.7%, but that ain't nothing. It's really amazing. And for years, at least in the UK, I was looking to buy commercial property, and before the pandemic, I almost did a deal. I'm really glad I didn't do the deal. I mean, commercial property in the UK at least is incredibly attractive because you buy it, you own the freehold. Commercial rents in the UK are paid quarterly in advance. And if they don't pay, you can get rid of them really fast. Under a week, I've been told by solicitors, you can actually push them out. Compare it to a normal tenancy, a personal tenancy. And boy, you can't even serve papers until 4 months. You honestly can't. So it's a little bit different dynamic. But anyways, getting back to commercial property, guys, I can see some of the properties I was looking at before the pandemic. They've cratered. They're available for like 25% of the price, the pre-pandemic price. I won't buy, even though I'm really interested. I won't buy because if that thing's sitting there empty, I have to feed it. I have to pay the business rates. I have to pay the other costs that a property incurs. And no, I'm not interested in doing that. So it's even though the reopening is much more progressed in the UK, utilization of property is down. And it's the same thing in the States here, guys. You can see it's 33.6. So I'm wondering about commercial property in the US city centers. I know unemployment in most of these areas is still double digit. compared to relatively low unemployment in the States as a whole. So it's very fascinating to take a look at anecdotal data. And I would invite you guys, take my lookups, Keystone Systems, things like that, or find your own. If you find your own, share them with me. I love looking at stuff that isn't really tracked by a lot of people. And I get that from Peter Lynch, guy who wrote One Up on Wall Street. He was a big believer in anecdotal data, and I've become a believer over the 20 years or 25 years since I read that book. A really fascinating book if you're interested in classics about finance. Okay, guys, that's it. I hope you have a really good, really profitable week. I'll be making money. Dividends get paid no matter what. And also, I'm doing well with the other assets that I have. Bullion sort of bounced a little bit, and Bitcoin. Well, Bitcoin just is, right? I bought Bitcoin, as you know, I shared with you guys before, I buy every Friday. So I bought Bitcoin yesterday. I bought Bitcoin a week from yesterday. And because there was that drop, I bought Bitcoin last Tuesday. So I bought it 3 times over the past 7 days. And I'm actually thinking about buying it again. I was going to do an experiment. If you're on PayPal, check out your control panel. They've added crypto. You can buy £1 worth of Bitcoin. Excellent. So I don't buy that. I buy a lot more than that. But the point is, it's going to increase the acceptance and drive liquidity into that market. So, all right, guys, been a real pleasure. Have a good week. A profitable week. Take care.